Ladies and gentlemen, welcome back to the channel. Today was a good day. Okay. Today was a good day for a couple different reasons. But from a market's perspective, wow. We have really turned a new corner here. Okay. Tesla stock is on the cusp of going through a massive short squeeze. And I really think the next 6 months, fundamentally speaking, are going to be really positive for Tesla. But from a tactical perspective, I think you're right at the cusp of seeing a bit of a short squeeze. That's what the technicals tell me. That's what common sense tells me. Okay. Following this tax bill today, let me just break this down in English for everyone. So we're not confused. We're informed. Okay. By the time Wall Street is telling you these things that I'm going to tell you, the markets are already going to be like pricing it in, right? I am giving you a heads up like none other. Okay. I'm really good at seeing things early. Don't know when they get reflected, but I'm pretty good at seeing things before they happen. Okay. I've learned this. Like, I'm good at being early. Usually not wrong, but early in some capacity or another. Sometimes really early, sometimes right on time, sometimes, far too early. But I think with the tax bill, okay, Wall Street focused on debt, deficits, blah, 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 blah. You know the debt to GDP ratio, right? Wall Street's only paying attention to one of the sides there. They're paying attention to the debt side, not the GDP side, and how that could be impacted from this tax bill. What if I told you the economy's going to boom like nothing you've seen before? Okay? What if I said that? Would you want to buy stocks? Would you want to be absent this market? What if I told you that? Well, how would you react? Well, that's exactly what I'm telling you. The economy is about to boom like nothing you have ever witnessed in your life. Okay? It's going to be like 2021 without the euphoria, with actual underpinnings to back it. Okay? And here in this video, I will break down exactly why that is. And I believe it starts with the tax bill. I think that's the first thing we should talk about because that's the big news of the day today. Now, it obviously needs to go through the Senate and things could change. And if things do change, specifically to no tax on tips, no tax on overtime, then this is going to be a slightly different video. These things still apply. I still think we're going to have a strong economy because there's other things besides the tax bill that we're going to talk about here in this video, but it would change things a bit. But no tax on tips, no tax on overtime will send this economy into overdrive. Okay? In a positive way, not in an inflationary way, but in the right way. Okay? Because the fact of the matter is, lower income consumers, take the bottom 50% of income earners, have been in a recession for 3.5 long years. If you know anyone that is an average worker that makes an average salary, household income of, call it $60,000 to $80,000 a year, they haven't exactly been thriving the last 3.5 years. Barely keeping their head above water is what I would say. Okay. Now imagine that there's no tax on overtime. There's no tax on tips. Imagine just how many people would want to work overtime, right? I remember when I was, cooking like a chef, if you will, the overtime, it just didn't make sense. Because I made $12 an hour, $14, $15 an hour. And then with the overtime, it was $20. And it all got eaten away from taxes anyways. It was what was the point, right? I still did it, but it just didn't didn't add up. It just didn't make a whole lot of a difference. Okay. So even from that perspective, I think there's definitely some positives to be had via productivity and via actually people getting out there and working more. But let me break this down as simply as possible. Like, keep it so simple it's stupid. Wall Street tries to overcomplicate things. X equals Y, and this is a reaction of that, blah, 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 blah. Even we had today, Goldman Sachs said that any positives from this tax bill in the economy are going to be offset by tariffs. Bullshit. Shut up. Bullshit. Wall Street is stupid, okay? The quicker you learn that, the better you will do. Okay, Wall Street has no clue what they're talking about. They're like a drunk guy at the bar that just spitballs shit. Okay, or a drunk girl that just spitballs shit. Okay, sorry for the profanity, but this is serious information. Here's the truth. The bottom line. The bottom income earners, the 50%, average income earners and lower, the majority of Americans have been in a recession for about 3.5 years. In fact, at one point, it was like 6 out of 10 people thought we were already in a recession. Like a year ago, this was. Part of that has to do with inflation, just over the years, cumulatively. And part of it just has to do with keeping up with the Joneses, people trying to, spend and continue to spend, consumerism. I mean, it's not going away, okay? Well, the people that are specifically benefited from this tax bill are not the higher income consumers, although yes, there is things that is going to help them as well. But no tax on tips, no tax on overtime specifically targets the lower income consumers, something that we have been unable to do in decades is actually help the people that need the help, okay? Now, here's the sad reality of the lower income consumers. I say it's sad. They're overall pretty happy people, I believe, but it's sad from an overall perspective because they spend all of their money. If you make an average income in America, you can save 10 to 20% of your income and invest it and get out of that bracket, okay? They don't do that, okay? For better or for worse, they don't do that. So here's the facts. They will spend all of that extra money and pump it right back into the economy. That grows the economy. That grows consumption, which in turn grows the economy, which lowers the debt to GDP ratio. Okay. Everyone's been hyper focused on this debt to GDP ratio is going to go up because of this tax bill. No, they're assuming that this tax bill doesn't cause any additional growth. Now, here's the other side you need to remember. No tax on tips, no tax on overtime. That's going to make real incomes on paper look higher, okay? Because they will be higher. What does that also help do? Well, makes it easier to get a house, makes it easier to get a car, makes it easier to get financed for XYZ because now you have more income on paper, okay? So even from that perspective, the autos, maybe home builders could even benefit from this as kind of a second tier kind of thing. I think it would obviously take some time for that. And that's why I believe this is so impactful. Instead of GDP growth being close to nothing this year, as Hassett has said before, and the senior White House advisor, you could see 3% GDP growth or more this year. Not as much this year, probably a next year kind of phenomena. Okay, so that's the first part of why I'm so bullish on markets right now. That's the big thing in a nutshell Wall Street is not paying attention to at all. Like, this seems so easy to me to see this, and hopefully you can see this as well. People spend all of their money. You give them more money, they will spend it. But it's not going to be inflationary because it's not a money printing phenomenon. See, Milton Friedman, late economist, put it perfectly, and it stood the test of time ever since. Inflation is a monetary policy phenomena. That means the Fed. That means money printing, okay? Monetary, think of money, right? Think of money printing. Now, fiscal can also, contribute to that. But the core which fiscal is like the federal government, right? That can attribute to inflation, but it always starts with money printing. Okay? You could say deficits are a form of that, but if it's offset by higher growth, is it? Is it really? I would make the argument it's not. So you're not going to see inflation. Inflation is going to dramatically undershoot expectations this year. Okay? Everyone's going to be watching and waiting for this inflation wave that's never going to come because we're not printing money. Okay? I talked about this in the last video, but it's like a bag of Doritos. Okay? If a bag of Doritos goes from $5 to $7, okay, cool. And you don't make any more money, whatever. You may buy it, you may not. But the off-brand bag of Doritos, which is essentially the same thing, is $4 or $5, whatever. You're probably going to buy that. You get demand destruction in a capitalistic world where there is no money printing, right? And inflation is, company by company specific via tariffs. You don't get widespread inflation via tariffs. You don't. Okay? You didn't in 2018. You're not going to today. Unless we start to send out stimulus checks. Like if a Doge stimulus check actually comes out, then we can talk about like inflation. You're not going to have inflation. Okay? Even Fed Waller said, you might get a, one-time price increase, but it's not going to be this inflationary wave like you had over the past couple of years. What's that going to do? That's going to allow the Fed to cut rates, because if inflation comes down to 2% by the end of this year, or is on a path to do that, why in the world would you have the federal funds rate at 4+%? You wouldn't do that. That would make no sense. So the Fed could be aggressively cutting rates by the end of this year. Fed Waller, said that as well, that the Fed would be cutting rates by the end of this year. And I think tariffs are actually going to come down much lower than people expect. Right now, there's a 30% tariff on China, but I believe China is going to crack down on fentanyl and open up their markets, which is going to drop that tariff down to 10%. Maybe there's a free trade agreement with certain countries and there's no tariffs. Okay. I expect things are going to get better on trade versus worse. That's the bottom line. And I don't think Wall Street's currently pricing that in or expecting that. Okay? I think the tax bill obviously is huge for the vast majority of the population. Like, give the say you make $1,000 a week, right? $52,000 a year. Okay? Well, if you're taxed at 20%, and let's call it's tips, right? And you're taxed roughly 22% a year, or on your check as you make that, that's going to give you an extra $200 a week. That is massive. Okay? Just to keep numbers simple here. As a collective, that's huge. Now, I think longer term as well, like over the next year, as rates start to come down, 10-year treasury yields come down, as people can actually start to sell homes again, buy and sell homes again, that's going to also unlock a lot of equity, and people are going to bring a lot of money to their bank accounts once they can sell their homes, because a lot of people right now can't sell their homes because they can't afford to get a new mortgage. But inevitably towards the end of this year, next year, when that's actually, they're able to do that again, I mean, you're going to take a lot of money to your bank. Like for an example, this house, I live in Michigan. So like 2021, I bought this house for about $80,000. I didn't even look at it, to be honest. I just bought it and said I'll take it because the price was so right. And good thing I did, because this house is worth $250,000 today. Yeah, sure, I've painted, I've done floors, I've done cabinets, I've done cosmetic stuff. But like, do I want to get a new mortgage? I mean, I have a couple other rental properties, but do I want to like buy a new house right now with rates where they are? Probably not. But when I do it, if I choose to sell this, I'm going to take hundreds of thousands of dollars after fees, after all of that, to my bank account. If I was a consumer and spent all of my money, that's like 10 vacations, dude. Like, that's a lot of money you could spend. So I try to think of things from a very logical perspective. So in the short term, tax bill, no inflation, Fed rate cuts over the next 6 months, I think propels this market 20+% higher into year end. Okay. I know, sounds crazy. Tell your friends. I mean, I'm very confident in this projection. I think 700 SPY by the end of this year is easily obtainable. I say easily because Wall Street, they're not looking at the right things. They're looking at the bad side of potential outcomes, and they're not even considering the positives that could come out of them. Okay, that's the fact of the matter. And then really next year, I think things get pretty crazy as well when more deregulation starts to kick in, as tax bills start to really bring fruit to markets, as rates start to come down and people can actually sell their homes again, as a focus on AI comes back and advancements in tech. I mean, you could get way crazier than most people even think. Okay? Imagine just if the Chinese market opened up to more US companies. Like it was in the news today, China is welcoming JP Morgan into the country. Imagine if that starts to happen on a large scale in many different markets. Like, nobody's thinking about that. What kind of earnings power could that bring to US markets? Like, I really don't understand the bear thesis right now. Like, I really struggle with the bear thesis. Like, if you are a bear, what is the bear thesis? We're not going to have inflation because inflation is always a monetary phenomena. Even if you cut taxes and give the lower income consumers a good chunk of this country, a couple $100 extra a week per person, you're not going to have inflation because it's not a money phenomena. You're going to open up global markets. Tariffs are going to come down more than expected. AI is still on and popping last I checked. Deregulation. I mean, where's the bear thesis? We're not just going to fall into a recession at this point unless people lose their jobs, and that's not going to happen, especially if this tax bill gets passed. Like, I struggle with the bear thesis a lot right now. I try to poke holes in my own thesis, but it seems so straightforward that like Wall Street is having a hard time wrapping their brain around it. Even as I talked about in the prior video, look at XYZ today. This is a great example. XYZ really caters to lower income consumers with Cash App, right? Stock's up 6.5% today on this tax bill. Someone out there understands that XYZ is going to be a winner of the lower income consumer recovering. But imagine if 50% of the population, roughly the lower income consumers, can actually get ahead and start to do well and spend more money. Like, how impactful could that be to earnings, to corporate America? I think it could be far more impactful than most people think. And then what are the secondary off tiers from that? Imagine the local restaurant that has been struggling for years, and now they're seeing a pickup in demand again because, a lot of local lower income consumers have more money to spend. That's going to benefit restaurants. That's going to benefit every single company, from autos to home builders to, Apple. Literally everyone is going to benefit from that. We have not been in an economy that has had a strong lower middle income consumer in 3.5 years. Okay? You have to go back to early 2021 to have that kind of dynamic where the lower middle income consumer was actually doing well. This is going to blow that consumer away if it passes the Senate how it's written, which is a toss-up. So, again, I think there's a lot to love here that Wall Street is not paying any attention to. There's not a lot to dislike. I see a pretty clean path of 20% higher from now into year end. That means that individual stocks could be up easily 20 to 50%, depending on betas, depending on, what kind of industry and how, connected they are to the positive forces that are at play. And that's where you want to be positioned. Like XYZ, yeah, that's going to be a good one. If this tax bill does pass the Senate the current way that it's written. Something like maybe even like a Tesla could be really good, even Apple could do fairly well. Everything kind of, but higher beta, AI, that's where I want to be in right now. Because I think the risks are so asymmetrical, right? The risk is that this market explodes higher, not shoots lower. That's my view. Again, I'm not a financial advisor. I'm not a financial planner. That is how I am positioned. Again, we could probably go ahead and wrap this video up because that's the bulk thesis of why I'm so bullish right now. And what I really think Wall Street is missing out on. I don't think we're going to get the growth slowdown. I don't think we're going to get inflation. I think the consumer can start to recover, something we have not seen in 3.5 years. A focus on AI, deregulation. Most of that kicks in probably next year as far as deregulation is concerned. Lower taxes, better trade deals, freer and open trade. Like, I don't know where the bear thesis is. Separately, when you think about Tesla, robotaxi launching, further progress on Optimus, the scalability of robotaxi, I think, is going to be a lot faster than most people think. Expectations that are really negative for Tesla from a deliveries perspective, from a margin perspective, from a, again, demand perspective. I see this as fairly straightforward and simple. Above 350, short sellers are in a lot of trouble. There's 81 million shares sold short. With the backdrop of what I just talked about, mix that with the positive catalyst coming for Tesla. I see Tesla as a $600 stock by the end of this year. And I think that break above 350 could happen relatively soon. And when it does, it's going to send you into probably the mid 400s. Okay, just look at the stock from a technical perspective. It's coiling here. You're looking like some stairs, right? You're stair stepping higher, and now you're just coiling right below 350. The larger the coil, the bigger the break, right? Like here, you were coiling, and then you ended up breaking. The stock went from 360 to 488. A lot of this was a short squeeze when Tesla hit all-time highs. Okay, you're in that same situation now. And I think with big catalysts coming over just the next couple of weeks, even again, newer models coming, cheaper models that are going to spur demand, lots of people are really not even thinking about these things when it comes to Tesla, right? A lot of people are still stuck in their bearish, thinking mentalities. And I think that is a huge mistake. Again, I think markets can rally 20% from here into year end. I think Tesla can rally 100% from here into year end, or close to that. Like a massive outperformance will take place in Tesla if I am correct. And I think a short squeeze, $100, $150 short squeeze from here, maybe even up to $500 could be in the cards relatively soon over the next month and a half. So let me know your thoughts on this down below in the comment section. Ladies and gentlemen, have a great rest of your day, and I will see you in the next one.